Everything's melting down in the crypto market and it's all over. But then again, we look at the price action and we see we're just beautifully forming this falling wedge. This does not have to play out bullish though, as these typically do. We do want to watch for some lower price targets. But when we're looking at just the data, we see currently the price action is just in this beautiful falling wedge coming down, scaring the bejesus out of those people that aren't prepared or that are over leveraged or have too much risk exposure. But we see bullish divergences forming on the RSI. We see bullish divergences currently still forming on the money flow, but these two can be broken. If the bottom falls out of this, I would expect a little bit deeper of a spill to the downside because we do have some signals like this one right here showing a huge amount of insiders in the stock market that are absolutely unloading and setting up sales. Is this signaling that the insiders know something that we don't know, that there's bigger moves to the downside coming? Stay tuned. We're going to get into that and more. Make sure you hit that like button, subscribe button, ding the bell. We're going to be getting into this in just a moment. Let's go. Downside coming. Are you ready? Let's get into it, guys. Everybody's having a heart attack right now because we're seeing something that is in absolutely every bull trend on any asset that you've seen in the history of ever. The question is, are we at the point right now where we should be expecting this bull trend to continue, or should we start looking at potentially hedging ourselves for a bigger spill to the downside? Well, let's not forget what we talked about over the last couple weeks, and that was coming into September, looking at potential chop sideways. And chop sideways isn't just a straight line sideways. A chop pattern means a rise, a retrace, a rise, basically just chopping back and forth, trapping both the shorts and trapping longs, basically trapping people that are wanting it to go up and trapping people that are hoping for it to go down. That's what creates that sideways pattern. And that sideways pattern doesn't have to be a $300 range or a $500 range. Hell, back last summer, we saw a basically $14,000 to $20,000 chop pattern that formed for 6 or 7 months before finally resolving after going from 74,000 down to 48,000 and then eventually breaking out to new highs up into, I think it was 109,000 or something like that. But the point is, you need to be prepared for the frustration of the market, and the frustration comes when you're unprepared. So get better prepared. It comes when you're overexposed, meaning you put too much in there than you're comfortable with having in the market. But what I'm seeing right now on the landscape looking forward, whether it's in September, October, November, December, or even sometime in Q1 next year, I do think that the biggest, the most explosive part of the bull rally in the crypto ecosystem is still yet to come. But that doesn't mean, with that hope, that you throw all caution to the wind and you just basically chop it out and basically chop yourself out in the process, because every rise in price you go leverage long only for it to reverse, and then you flip short only for it to reverse back long. Stop chopping yourself out of this market, because we're seeing some signs and signals and key levels that we need to be watching that can keep us better informed. Coming back over to this chart right here. Actually, as everybody rolls in here, welcome to the BitLab Academy family. Welcome to the show. My name is Kellam. Shout out to our channel partners, Bitcoin IRA and Arculus. Head over to getarculus.com. Use code BitLab20 for 20% off. The best crypto cold storage solution there is. You got to protect your future. And the way you do that if you're in crypto is you protect your crypto. So head over to getarculus.com and you can get all situated with that. I see we got about 1,000 people in the room right now between YouTube, Rumble, and X. Shout out to everybody that's here. Get active in the live chat right now. Let me know. Say GM. I want to see everybody. I want to see 1,000 different GMs in the live chat right now. I want to see GM, and I want to see, are you buying or selling? And also, what is the last thing that you did? Did you buy or sell ETH? Did you buy or sell Bitcoin? You don't need to say the amount, but I want to see what the general temperature is. Are you guys scared, or are you bullish? Are you buying the dip? Let's get active. We need to do this as a community, because I'm breaking things down for you, but we also want to see what everybody else is doing in the market. So diving in, what do we see? Again, I opened the show with this just a couple minutes ago, but this is just the basic formation that I'm watching right now. We have the relative strength index. We also have the Chaikin money flow, just the money flow, and we have the price action with a couple key levels that we have outlined here. Notice, if you're not on a 1 hour chart or a 15-minute chart, you realize that there's some patterns that have formed here. Now, there's some conflicting patterns because on the one hand, we do have a double top formation here. But on the breakdown here, we've also formed a falling wedge. Falling wedges tend to break bullish. They tend to break to the upside. However, we have seen, and I have gone over this hundreds of times, if not thousands on this channel, and that is these patterns that 70% of the time they break bullish. What we've seen more often than not in the last 6 months, especially, is although these are supposed to break bullish, you get basically a washout in both directions. Maybe a fake out to the downside that says, well, this is invalidated, only to have a sharp recovery back up and then come back down and then pick the direction, meaning chop people out down, chop people out up, come back to center, and then that direction's decided from there. Or actually breaking out bullishly like this pattern suggests. So everybody goes leverage long only to flip back down around and then wash out and break below this line as well and come a bit lower. So you need to be a little bit cautious right now with the moves that you're making because the market feels like it is really just setting up, primed in a way to take advantage of the hope and excitement and the fear and the FUD all surrounding this market, especially with the uncertain grounds we're on right now, with everything going on, with every bit of change you can imagine within the administration and with regulation and crypto and with the Fed and the rate cuts. And now this morning with Lisa Cook, the Fed governor, and basically trying to having a hearing regarding the Trump firing her or removing her for cause. It leaves an uncertain feel in the markets about what's going to happen. So you're seeing a little bit of a spill down in price action. Now, at the same time, we're seeing some price action move down on Bitcoin. We also see that the difference here is that the S&P 500 has been pushing up into new highs. A little sell-off, push up new high, sell-off, push up to new high. But I would caution you here because this is also starting to round out like this. It doesn't mean this has to break down, but it does show a waning momentum for the bulls, which means the bears could be waking up. And the reason why I'm a little cautious on this, and this is going to spill right over into what our considerations are in the crypto market and Bitcoin and altcoins, is the fact that we've got this absolutely red wall here. What is this? What the hell is this red wall? This is the top insider trading. So basically, this is basically getting the insiders. This isn't like people are getting charged with insider trading. No, these are the insiders of all these major different companies and corporations and investments. Basically, are they buying or selling? And this is all transactions. You see, I didn't do just sell. This is all transactions. And if you look at today, going back into, primarily the dominant trend here is there's a massive amount of the top inside trader alerts showing that they're proposing sale or selling. Now, is this de-risking coming into September? Is this a sign of a bigger, more bearish story that's developing going into the end of the year? I don't know. We don't know. We can't know until this plays out, until we get more information. So let's just pay attention to that. But if we do come over here and go to buys, just to dispel some of the FUD, there are buys here. And it's just not nearly as active as the sales as we just saw before. So we just need to be a little bit cautious here, because if we do see a sharper correction on the stock exchange, on the NASDAQ and S&P 500 and Dow and, key other tech stocks and so on and so forth, that risk off behavior may spill in to the Bitcoin and crypto market as well. Now, it doesn't have to. We're just talking about the different ingredients and the different stimuli, the tools that people are looking at and using as a barometer for the other assets they're in. So we need to pay attention to this because it could be a developing story. Now, I just want you to highlight, I want to highlight something here. One should not fear the dip, for dips are gifts granted to the convicted. And essentially what he's showing here, and this is a great chart. I tried to find the updated one, but I don't have it on my on-chain modeling. The net realized profit and loss. This isn't unrealized. This is when people are selling, are they selling in profit or are they selling in loss? And look at this huge selling in profit, which marked a bit of a local top. This was $74,000 before it dipped down to 48,000. Now, what do you notice here? We had kind of had a semi double bottom here, but each one of these bounces, and this one ultimately led to a bounce with continuation, is when the profit and loss metric, are people selling in profit or are they selling in loss? When this flips to where the majority, all of a sudden it switches from being in profit to loss, that marked a bottom bounce. And then we got the secondary one here, a little bit of a bull div there as well, in terms of how deep this one and how shallow this one is, marked where basically the profit and loss marked the bottom boom of where that moved. Again, move up to 109,000. Cool. Now sell off. Now, where did we reverse? When everybody flipped into loss. So now this is about a day. It's about a day old. It's a little under a day old. And we see that we're still kind of, I don't want to say substantially, but we're still very much in the green. Now, after today's move with Bitcoin having a bit of a sell-off, let's go to the one-day chart and zoom in on this and just notice here, we've had a pretty red day. But as it stands right now, we're still within this bullish pattern. We're still within this, let's not even call it a bullish or bearish pattern. We're still within this chart formation where we have this resistance, support, 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 support with small wicks to the outside. If we come down to the 4 hour, notice also we did have a huge amount of volume that came in right here. And this is, I'm coming right down to attack the bottom side of this range. Now, the interesting thing about this is the bottom side of this range is also kind of correlating to the horizontal range that we've had on this chart for weeks, if not months or more. And that is these previous tops, this finds support on the bottom side, this rejected on the bottom side. So this is kind of how I define that area. And look at where the price action is coming. Not only the descending support line from the pattern, but also the horizontal of previous price action right in here. If we do lose this, is it the end of the world? Absolutely, it is not the end of the world. It is not the end of the world at all, because what we have is a huge amount of levels below us that we can still pay attention to. I start getting worried if we start getting down below $90,000. We've got a huge buffer between where we're at and those levels. It is important to note, though, let's actually pull this up. Bitcoin strategy platform. Let me pull this. Let me change this in case my emails and everything pop up here. Let's go to key levels. Here we go. This level right here is very important to note. We are testing the short-term holder cost basis right now. In fact, we're slightly below it. The short-term holder cost basis right now is about 109 something. Let's actually come over here to key levels. Where's the key levels? I have eyeballs, I promise. There we go. Key levels. So the short-term holder, let's turn off 21. Let's turn off the 200 day. And we see that the short-term holder right now, this is not updated. Yeah, short-term holder cost basis. I can't get, let me go like this. Let me zoom in on it. There we go. Short-term holder cost basis is right about, it's 109. So we're under the short-term holder cost basis. But the problem we have now is twofold. We see the price action testing this level, which we know has been a great delineator in previous cycles, especially if we zoom this over here. Look, once the price action breaks above the short-term holder cost basis, this has acted as support all the way up. Yes, we had a tiny deviation here. That was also a move from about $2,973 all the way down to $1,900. That's a pretty damn big drop, right? It's a 30-40% drop. Now, what do we have all the way up? Support of the short-term holder cost basis. Now, if you zoom this across, notice same thing in the bear trend. It's resistance, 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 resistance. Okay, this was support until we went into this sort of intermediary chop zone because of the COVID crisis. And then you look at the rest of the cycle, boom, support, support, and just complete separation there. This cycle is a little bit different in that we have tested the short-term holder cost basis several times. We have gone below it and stayed down there from, look at this. This is August 20th all the way over to October 16th, October 18th. So about 2 months. The price action was under the short-term holder cost basis, and it rebounded very sharply. Very early in the cycle, the bull cycle, bull trend here. and then yet again tested it. And then yet again, we went above the previous all-time high before the halving, which kind of shook things up a bit. People didn't know what that meant. Was that going to be the top? And then the price action found support and then lost the support of the short-term holder cost basis, rejection, rejection, rejection. And this broke down on, let's see, the June 18th, and it broke back above and found support on October 6th. So this was a couple months in questionable territory. And yet again, it happened back here. What was this? This was short-term holder cost basis breakdown in, is that February? Yeah, February 18th. And we broke back above it on May 1st, May 2nd, April 22nd-ish. End of April, let's just say that. So a few months, right? Each time. The difference here, though, is the fear and hope both coalescing at the same time about where we are at in the current cycle of the Bitcoin trend. Is the 4-year cycle going to perfectly play out again because of the halving? In this case, look, we're coming up on the 2017 cycle. We're coming right up to about the same spot that we peaked. This orange area is how far we've traveled since the halving. And we can see right here, you know, this is marking the same position. 2013, we would have already topped. 2017, we haven't topped yet. 2021, we had a sort of semi-top sell-off, and then the actual top was right about where we're at now. So this is going down to what we're talking about when we talk about the 4-year cycle. If we measure this from the cycle bottoms, notice we still have upside if you're measuring from the cycle bottom as it relates to the previous 2 cycles. Now, again, where we're at right now in the cycle with the price action now testing actually under the short-term holder cost basis, and the debate about having the 4-year cycle play out again, which would illustrate or identifies about October, November as where the cycle top would be if we're still on the 4-year cycle. The question is going to be, do we get a pretty big sell-off here to contend with some of that fear that people have de-risking, but then also institutional players or big money players that understand that fear that also pressure the market down because they want to buy cheaper Bitcoin? Or do we actually get the full bear market breakdown? I don't think we get a full bear market breakdown. If we were to get a big sell-off, in my opinion, what we would do would be something like we saw here. We had a bull market, bear market, but then another larger bull market, right? But Kelly, this isn't a bull market. Well, first things up, okay, understand the time frame you're talking about. I can come here on a 15-minute chart and say that this is on the 15-minute chart, a full bull cycle. Here's the bottom, here's a full bull cycle, here's the top, here's the full bear trend here, so on and so forth. When you're looking at different time frames, you identify different identifications of the bull and bear trends. So now looking at this sort of early bull, washout, and then full bull, this feels a lot more extended and a lot healthier with the stair steps that we've made on the way up. Now, if we were to get, let's go to a cleaner chart. If we were to get, let's, it's remove all drawings. There we go. If we were to get a bit of a sell-off here, and this is very possible, I think still we're going to have a very bullish 2026, or at least a good period of 2026 is going to have a very strong bull trend. We very well could see this come into a topping formation in the midterm and come down and, work its way down and actually scare the living bejesus out of people, potentially even coming to somewhere like this, all the way down to $72,000, $74,000. This is possible. This could happen this year, before the end of the year, and then into 2026, work its way back up. Everybody thinks this is a false top, like basically a dead cat bounce, and then have a bit of a sell-off and then actually work its way up into 2026 into new highs, up into 150, 180, 200 plus. Now, do I think this is going to play out? No, but this is a real possibility because markets do what nobody else is talking about. Everybody's thinking that, and I'm still of the opinion we're going to go to 180, 220 on a conservative basis for the top of this cycle, but that doesn't mean it has to happen this year. In fact, because the 4-year cycle is coming kind of towards near that area time frame of people thinking that the price action is coming to the end of the 4-year cycle, that we very well could have this be a self-fulfilling prophecy and then launch. Now, what I really think is going to happen is, as we're doing right now, this is testing down into this previous range right here, this previous range high, right? I think if we get a little bit more spillage to the downside, trapping people here, and then coming up and, rocketing up into the end of the year. Where's the end of the year? About right here. Let's redraw this. Let's go to the daily. So there we go. Something, boom, coming back up. Something like that. Hitting a top, around the middle end of the year, conservatively around 138, 140, selling off into the end of the year, the tax and the harvesting and all that kind of stuff that happens, the de-risking of people, closing out their finances for the year and so on and so forth. This to me is more likely than this, but I'm prepared for this destruction if it happens. I just want to highlight this as a possibility so you don't get wrecked if the market does pull back. And that wouldn't be a small pullback. Let's see. What would that be? Let me see come on, shift button. There we go. That would be about a 40% pullback, 42%. That's what I kind of see of us having a bear market, is something like that. And I think this is about maybe, I'd say 25% likelihood. And I just want you to be aware of it. That's all. Now, when we get back over to the actual charts that we're looking at for what we're seeing, remember, we have this basically parallel channel. Double click here, minimize the indicators. So we have this parallel channel with the sort of halfway point projected out. Price action is very well respected these zones, you see. And we're basically now fighting to get out of a multi-year trend line. We've talked about this. Resistance, kind of a little fake out there, a little fake out. We've talked about this a bunch, but there's always new people, different people, or people with a more open mind that may have even heard this before, that maybe this time it will click. There's nothing weird about this. It's had trouble for years getting above this projected trend line, from back here in 2021 to here in 2024 to here again in early 2025, and then here in May and June, rejection. We finally just broke out. We're coming down, testing the resolve of the bulls. If we get the deeper dip that results in a bullish recovery, for me, it would be something like coming down into this 105, potentially 101, and then coming back up sideways, boom, launching. Now, this is not going to be representative of the time frame because this is a 3-day chart. Let's go to the 4-hour chart. There we go. Let me minimize this, get maximum screen real estate. Okay. So it would be something like this. Let's see. Get the drawing button. Another move up, come down here, tap, come up, reject at this area because it's so much price interactivity there, and then break out. Now look at the time frame. This is what I'm looking at as I'm drawing, is the time frame. When is the FOMC? FOMC September 2025. I think it's the 17th, 18th, but let's see. Yeah, 16th, 17th. Is this right? Yeah, so 16th, 17th. So coming back over to the chart, I have this drawn out. This would be going, so this would be about right. Yeah, something like this. We're coming into the FOMC meeting. Everybody's expecting cuts. And then you get the cut, then you get the sell-off. Much like the link news yesterday, great news, and then the sell-off. The ETFs going live for Bitcoin, massive pump into that news. They go live, sell off for 12 days. Same thing here. A move into the FOMC meeting, sell off, and then a continuation. If we get the rate cuts, I think we'll be pretty sharp because of the investor ignorance about the rate cuts and what's going on with Bitcoin. Rate cuts don't freaking matter for Bitcoin. It's the stupid speculators that are trading the hope and fear in the market. So stop giving them hope and fear in the market. I'm going to say that again. Regardless of if the price breaks down or pushes up or how it responds to the Fed rate cuts, if they get them, if they pause, who gives a... Bitcoin is better than the US dollar. It is outside of that system. The only reason the price might pump up into the FOMC meeting and then sell up after because it's good news and the news, buy the rumor, sell the news, is because there's speculators that are taking advantage of the hope and the fear in the market. So stop giving them hope and giving them fear. Use your data. Use your knowledge, use your understanding of this market to realize that Bitcoin is getting positioned to be realized as the best asset in the history of the world. It already is, but the world is now waking up to it. So when you get gifts with this dips all the way down, oh my God, it's coming down. Even if it comes down here into the 90s, even if it comes down here into 88, these are all just better opportunities because the world is just now getting integrated with this in a real way. It doesn't give a good God D if the rate cuts happen or not. It doesn't matter to Bitcoin, but there's going to be a speculative market around it. So when we see the price action move, let's take advantage of it. If it goes up, we sit pretty. If it goes down, we get to buy and sit even more pretty the next time it moves to the upside. The question is, what's your risk tolerance? Of if you buy and it drops, can you hold? If you can't, then you shouldn't be buying. That's it. You have to make these decisions for yourself. Thoughts on September? Well, I guess you can scroll back because I've been talking about this for the last 30 minutes now because that's exactly what I've been talking about. But I appreciate you being here. TD, how you doing? Drop to 70K would be excruciating. It would be excruciating. Again, I put that at a low probability. My point here is to outline the different possibilities of what could happen so you don't get caught holding the bag or making the wrong move and jumping in or out because of a misinformed decision or not being prepared for it. Again, I don't think that's going to happen. I still think it's a little bit unlikely that we'll drop below 100. And if we did, remember, we have that CME gap down in the $92,000 range. So that wouldn't be out of context. I start getting worried if we're like below like 88,000 and stuff like that. Other than that, it's all just perfect dip buying opportunities, or you just got to hold a little bit longer. The total 3 also, looking at the total 3, come on, get on the right chart. Looking at the total 3 here, we kind of built this sort of stair step function to the upside with these little washouts, washout consolidation, launch. Okay, we came into a bit of a consolidation, drop. Oh my God, found support. Look at this beautiful kind of inverse head and shoulders, rounding bottom, finds support, moves up. We have a downtrend resistance. We're just kind of hanging out in this zone. And in fact, we're actually holding pretty beautifully above this. Big bear washout. This is on the entire crypto market, minus Bitcoin and Ethereum. All the alts comes back up, holding pretty nice. And you can see this reflected in the Bitcoin dominance. Looking at the Bitcoin dominance, and remember, we drew this line months ago. And we lost it. We came in, we got a little bit, little baby alt season. Do you guys have this problem when you're using TradingView? Maybe I only do because I stream while I'm on TradingView. When you put on the brush, when you're done using it, after 3 or 5 seconds, it's to just go away. So you're not trying to move the chart and drawing all over on an accident. It's so frustrating to do that. So let's delete that. Okay, we talked about this being a potential next stair step down. It happened. And it came, look, right into the target that we outlined. Guys, we've been nailing this. And look, everybody's fearful. This still looks like another setup for a leg to the downside. We're going to be prepared if it goes up, but the market's feeling good, guys. Remember yesterday we talked about Aerodrome, and also earlier this week when the price was pushing up into these zones, we were talking about the price. I said, okay, this is looking like the momentum is getting weaker. How can you tell? Simplest way. Like you're a coloring book in preschool. Look how big that line is. Is the next move the same size? No. That means the bullish momentum is getting smaller. Okay, well then let's delete that line. Let's measure this one right here. Okay, let's see this next one. Is it the same size? It's kind of washed out down. So it's exactly the same size with an actual bearish wash down. So momentum is weak there. Price action also rolling over. It's rounding. So bulls are getting weaker. This means the bears are getting stronger. It doesn't mean it's the end of the trend entirely, but this does mean that you may need to come back and retest some levels. And that's exactly what's happening. When price was up here, we were talking about how exciting it was at the golden pocket. And I said, be cautious. This may get rejected, and if it does, it's going to come back into that 118 to 114 cent range, which is the trend line that has been here since March of last year. Support, 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 rejection, and look, bounced right on it, and this is where we're at right now testing it. So we have lost that level, but had you been paying attention or prepared or even emotionally prepared, so you're not like, what is happening? It's like, okay, I held hoping it was going to go up. It didn't. It went down. So do you exit here? No. For me, I look for opportunities to add to the position. So it comes down. The target I'd be watching for is this 382 on this move, which would be about $1.07. But this is on the macro move, right? From this point, midterm macro, from this point to this point. So what is the fib on this specific move? So on this zone right here, we took a fib from the top to the bottom, and this gives us bounce fibs up to the upside of prices to watch for. Now, on the contrary, if something pumped, you measure from the bottom instead of from the top, and then it shows you potential retrace levels. Okay, comes down, bounces initially right on the 382. See, look at this. Bounces. Now it's lost, came right through this trend line. So the next level we're watching, and it correlates with the larger fib. This is a larger fib's 382. And then we have the golden pocket right here. AKA, if this sounds like a bunch of jargon, the Fibonacci sequence gives you a projected range or target levels that have some higher probabilities of where a price may find a target to bounce or get rejected, okay? So what we're seeing here is the loss of this first fib, the 0.382, which is 38.2%, right? 1 is 100, so 0.382, 38.2%. That's what we're seeing. This is the golden fib, this 0.618, 61.8%. It's the law of how everything in nature is organized, including your emotions on the chart, because that's what a chart is. It's a map of the market's emotions of the asset. So this is the target we're looking for. It's scary. Okay, first target down $1.07, but then the golden pocket is down into the $2, $4 range. So we're looking for a potential breakdown target of down in here about, I'd say, 101 to 101 to 107. This zone right here would be a great bounce target. Now, if this is lost, I feel like I got boogers hanging on my nose. If this is lost, then what we will see is, potentially even a bounce into this. God dang it. Okay, click 7 times. There we go. A bounce into this, rejection, and then coming down somewhere into this range here. We have all of this liquidity here and the 0.786 fib. If we do lose this, I'd be looking down, into the mid-low 90s, because this will also be at the intersection of where this larger trend line is right in here. Look at that. God, the slices right through it. My point with this is on Aerodrome or Morpho or any of the alts you're holding, we're seeing a little bit of softness right now. We're seeing a little bit of softness in Bitcoin. We're seeing a little bit of softness in Ethereum, double top sort of ugliness here. This is from the Discover Crypto stream that we did this morning. Let's delete that. So yeah, if this does come down, if this loses this level, like on the daily, I'd be watching for a 4,050, 4,080 bounce. If we cannot bounce there, then I do think we're going to be coming down into, the 3,700 kind of range. But I'm still bullish. It just means in this smaller time frame, on this 4-hour trend, we may be getting a larger correction to come and reset down here, 3,700, where all of this price action, the previous price action support will be. Where price action was finding a lot of chop will be a target for where price action will likely come and find some support later. It's a great rule of thumb when you're looking at the chart and going, where might it bounce if it drops? But again, I'm of the opinion that a lot of what's going on in this market is more kind of like controlled bear pressure manipulation to the downside. The thing that gives me a little bit of pause is in the stock market, coming back over here to all transactions, the top insider trading alerts recent week, top insider trading. This is all transaction buys and sells. We're seeing an overwhelming amount of red here. In fact, I don't see one green thing. This is all still today. All right, no, this goes back to 26, 22nd. So dominant red selling from the big corporate insiders and top, players in the traditional markets. A lot of selling. So is there something bigger at play, or is this more of a risk off sort of environment due to what's happening, waiting for the determination of the rate cuts or not? What happens with Lisa Cook, if there's going to be more random bizarreness, with lawsuits and with the U.S. I mean, it's very weird time frame for markets where it's ultimately super bullish, but then inflationary concerns, but then we know they're going to print more money. So it's just, yeah, Brillo, short-term bearish, long-term bullish. That's the term right there. In the near term, I won't even say bearish. In the near term, I think the bearish narrative is triggering a lot of fear in the market. So if you understand the longer term approach and play for what's happening in crypto and the stock market as well, if you understand that, then you can utilize the short term, the near term bearishness to find incredible opportunities. Even if that doesn't mean buying an asset, that could be a great opportunity to get your butt away from the computer screen, away from your app screen. Stop checking your portfolio prices. Go outside, hug a puppy, kiss a friend, go skateboarding, play some golf, play some guitar, cook some food. Remember, this life isn't just about numbers on the screen. Sometimes de-risking can just be getting away from the stress of checking everything all day long, every day. I'm expecting, as I've outlined for the last couple of weeks, some choppiness in September leading into when we get that FOMC rate decision. And then even after that, even if it's great, we get the rate cut, I think that will still end up, we will always see a retrace from a pump. So stop being so bothered when we see retraces. But I love you guys. I appreciate you. Jay, Crypto Knight, Brillo, Granny's Garden, Alexandra G, how you doing? Ricky Ross, Gil, we got the crew in the house. Big love to each and every one of you. I appreciate you. Hope you have a wonderful day. I got some great stuff coming. I finally finished getting the things I need to finish the studio over with the fellas, our new studio. And I got a lot of stuff coming for you guys that I can finally get super focused. I got somebody to watch the dog too. So it's going to be all me with the BitLab fam, with the Discover fam, with the Discord crew and the BitLab members here on the YouTube. When you're a member of this channel, you're going to be getting a lot of great things that I'm doing in the Discord, but also private things just for you guys, as well as quite a bit of educational content I'm going to make available to you guys that previously was in the BitLab Academy. I can't make it all available. It's like 120 different lessons, but I'm going to make some new ones available, make some of those old ones available, fundamentals, indicators, trading, a bunch of stuff there. So take advantage of it. It's $1.25 a week to become a member here on the channel at the basic level. If you want to help out what we're doing, there's higher levels in that as well. But just hit the like button, subscribe, ding the bell, and hit that join button, subscribe, but join to become a member, get involved. I love you guys, but that's all we got. Hope you have you're talking into my left ear. Well, talking to my right ear. I see, I'm just reading the comments here, but I hope you have a good day. Hope you have a wonderful weekend. We got 2,200 people in the house. But I got you. Have a wonderful day, everybody. Adios. Adios, muchachos. Thank you for coming.